Hey folks, today I'm posting a video that's an archive from back in 2021. And I found this video in one of my folders, and I was like, it was my forecast back in 2021 of what might potentially happen in 2022. And I thought it was intriguing because back then I talked about, people talking about a housing crash, and this video is all the way back in 2021. So I thought I would share this video with you guys today because it is relative in today's market, and it helps maybe put some ease to a lot of people's minds about that housing crash that was supposed to be, that actually never happened. So without further ado, let's get to video, and I hope you enjoy it. The background's a little bit different at that point. We had a different website and some other things, but hope you enjoy the information, and please leave some feedback down below on what you think. Thanks for watching. Take care.
Okay, so why did home appreciations go out the roof last year? Okay, so here's my, I guess I'll say, hypothesis on there. And I have a lot of pullback throughout the industry. People are saying, oh, that didn't cause that, or that didn't cause that. Well, you watch this video. I'm going to try to do this as quick as I can with charts and everything else. And then you come up with the conclusion. I'd be happy to hear your comments down below. What do you think is caused it? And do you think we're back to normal, or going to be back to normal like I'm thinking? So watch this and let me know your thoughts. Talk about is basically why I think, and this is my opinion, and I'm going to give you all the data that I have. And then you guys, once you see all my information, please post down below. Let me know your thoughts. Okay, so here's my thoughts, and then I will show you the facts and the numbers behind the scenes. Okay, so I said, it's supply demand. Every product, how prices are created is supply demand, trying to get an equilibrium. Okay, here's a good analogy I'll say. Bread prices. When COVID hit, everybody ran to the store and bought all the bread. Well, let's just say the bread manufacturers really cut back on production. Okay, so what would happen to bread? You couldn't go to the store and never have bread, or when they delivered the bread, the first people there who bought it out because they needed bread. What grocery stores do is they adjust the rate or the payments or the cost of the bread to the point where there's an equilibrium. They have enough to sell, and they try to get the highest price to appease the public. Okay, hopefully that makes sense. So what they do is they keep raising the prices until there's an equilibrium, and then they know they have enough supply for the demand at that point. Okay, so that's the analogy I'm going behind on all of this. So let's get on to the numbers. So first of all, we know prices on homes skyrocketed last year. They were up 15% across the board, okay, in the 12 months of 2021. All right, these are all I found online, I found through statistics, I found through government websites and everything. The normal appreciation, or the appreciation we saw in 2020, was 6%. The normal is usually 4 or 5%. Okay, so why did it almost double, triple, quadruple? Okay, so let's go to the supply. All right, so let's get into why I think there's a low amount of supply. All right, so in May of 2020, there were 4 million people in forbearance. Okay, that's the facts. What happened? And I did multiple websites just to prove my facts. And this one was posted in August 30th of 2021. The number of homeowners in forbearance reached its peak the week of June 7th, 2020 of 4.7 million. Okay, that was 8% of all mortgages. All right. So now we're going to continue with the supply. And a lot of people are like, oh, this is just a blip in the radar. Guys, everything counts. All right. So here's what we see on home building. Let's go 5 years. 10 years. Okay, do you see the blip in the radar here? Yes, we saw this crash. Okay, that was well deserved. But let's go back to this. Let's go to a 10-year chart. You're going through, and then we had a nice little spike up. Rates are down and everybody's looking to buy, and then it just plummeted. Okay, there was a lot of factors. So if you run the line through here, okay, there's a huge deficiency here. Another thing, or another piece of the equation that a lot of people don't understand is millennials. Millennials is a bigger group than baby boomers. There's a bigger group of millennials than baby boomers. There's people hitting 25, 40 years old that now are looking to buy and can't qualify for homes. So you have a surge in the number of people that want homes. So the demand keeps going up. All right, so let's keep moving forward. Another piece of the puzzle are foreclosures. Okay, so what foreclosures are in the system, and they're built into the system basically, and they provide liquidity for homes. Okay, that might sound terrible because it's like, well, you're stealing a home from this person and giving it to this person, but it is a part of the evolution of housing. Okay, I'll reference it as that. So if you look here, foreclosures, they fell to as low as 3,000 to 4,000 in the year of the pandemic when forbearance programs were in force. Okay. So what's the normal, or what's the average foreclosures in the country? Here it is. Okay. So we saw back in here, we didn't need to build homes back here because people were losing their homes. I'm not glorifying that. I'm just giving you the facts. So you have all these houses that are getting foreclosed on that needed eaten up, and people that you would swipe in and, spend 50 cents on the dollar to try to get these. Well, let's see how it progressed throughout the years. It went down and down, and I contribute a lot of this to good underwriting standards too. Down, down. Can you see over here? It just fell off. Basically almost went down to zero. That's unheard of. Okay. So this coupled with this is creating a shortage in housing. All right. So now let's go to the demand. All right. So the first thing we have in here for demand is the United States disposable personal income. So here's the norm. You're going through. Then we'll look over here. As these years progress, you see 2020. How did we get more disposable income when we had an unemployment rate that was basically double digits? Well, then we progressed through in 2021. We even have more disposable income. Well, how can that happen when nobody's working, the pandemic's going on, and everything that possibly can be bad is taking place? So we have more money. These are government charts, okay? So now we go to consumer spending. All right, this is the normal progression on how consumers spend. And then, yes, we fell off the roof right here. But then in 2021, we exceeded where we were in 2020, 2019, 18, 17, 16. How? Okay, how? All right, now let's get on to applications. Here's applications. This continues with the demand. People want mortgages. I won't say mortgages, they want homes. Okay, so let me round up this in my context that I talk to even on other people's shows, and then they look at me like I'm crazy. We don't have the supply. One, we know we have supply chain issues, a given. Two, people weren't building. Okay, contractors weren't building because they got burnt in the previous years. Plus, they didn't have the labor forces to do so back in 2020 when COVID hit. So we had a down track in building. We know that, okay? But people are still buying like crazy. House goes on the market and you got 50 bids. How? Well, we just showed here, even though the pandemic was going on, people had more income, more disposable income, and they were spending that income. That also routes in my analogy of why I think a big portion of inflation is transitory. It goes back to my charts, and I'll click those on while I'm in the background. This, again, let me recap it one more time. This is disposable income. It is basically, I'll go back 25 years. It's never been that high. How? Especially when we're in a pandemic, when everything was shut down. So this routes back to this, my conclusion, and what I've been saying for the last year or two. Home prices are going to go up. Why? There's no supply. There's no foreclosures. People aren't selling because they're in forbearance. I proved it. But people have the money. That's why inflation is so high. They weren't spending it on housing because they were in forbearance. Okay. And they also had student loan payments that they didn't have to pay. I capitalized on that, or my children did. So we had more disposable income. not as many homes for sale as I proved, what's going to happen? What happened to that bread when when the suppliers or the manufacturers started making less bread? The prices have to go up till there's an equilibrium. So what my thoughts are for 2022, people are going to get back to work. Now there's still a disconnect on why people aren't going back to work. Eventually people are going to have to go back to work. Okay. It is what it is. You're going to either create your own job, you're going to go back to work, be forced into that job you didn't want, but try your best, educate yourself, do what you can to get out there in the workforce to get that going. Plus, forbearances are over. So now people are going to have to start making mortgage payments. Student loan deferrals just got pushed a little bit further, but as soon as those kick in, you're going to start having to make your mortgage payment and your student loan payments. Okay, that's going to suck a lot of the money supply out of the system because you're now going to have to use those for your bills, the two major bills you're going to have in your life. So you're going to start seeing disposable income start to come down. Okay, once the forbearances are over and the foreclosure moratoriums cease, you're going to start having more and more houses come on the market that are already constructed. And then home builders are building out as fast as they possibly can based on the supply chain issues and labor issues, but they're doing their best they can. So what I'm saying is I'll just say by the end of the year, we should come back to as normal as we can. However, we don't know a lot of things. Is there going to be war? How bad is the coronavirus possibly going to get again? We don't know these things. So based on if the world remains as normal as it possibly can be, I'm laying out my reasons why we're not going to see a crash. We'll see more houses come on the market in an equilibrium, bringing down, we'll have the supply up. The demand's the same. So what's going to happen? It's going to start halting or at least putting prices in a range of a normal appreciation. And then also the same thing with inflation. So I hope you find value in this channel. Please share this because I'd love to get the facts out to people versus you hear a lot of shows and everybody just, oh yeah, prices are going out. Oh, there's going to be a bust. They don't know. They want your click, but they're not giving you the facts. And that's what we provide here. So also, if you're in the process of a mortgage, we'd love to help you. And the best way to reach out to us is over there. You can call us 844-775-5626. Or click the meeting button. It's going to open a calendar, give you the days and times we have available to talk to you guys either on Zoom or by the phone, or the apply now button. Just click that and you're on your way. So thanks so much for watching, guys. Please don't forget to give me a thumbs up, subscribe down below, share the video if you would. A lot of people need to know this information because they're sitting on the bench and they're watching their rent payments go up and up and up and up. You guys are the only ones that can decide if buying a house is right for you. But just think of it. Once you do buy, you don't have to worry about your payment going up 4, 5, 6% a year. Just saying. And it also is a wealth creator. So take care, guys. We'd love to hear from you guys. Please make sure to comment down below. I'd love to answer any questions that you have. Take care. Bye-bye.